Did you know that at the end of the forbearance period, you will owe the bank every single penny that you did not pay them during the forbearance period, and that the bank will most likely put a lien on your property that you will owe at the end, or if you refinance or sell your property? I will explain how to avoid that and what your options are. We're coming to the end of the forbearance period in the year 2020, and a lot of people have been asking me, what happens when the forbearance ends and I have to start paying my mortgage again? I've done other videos that focus on every option that you have when the forbearance period ends. In this video, I'm going to focus on the most popular option, which is deferral, and what I think is a better option for you. The CARES Act says that any government-backed mortgage must offer any individual who's affected by COVID the option to put their property and their mortgage in a forbearance for as long as 6 months and then another 6-month extension. We're coming to the end of that period. So the banks are now sending letters stating, we will offer you what's called a deferral. A deferral is taking all the money that you have not paid to the bank during the forbearance period and essentially putting it at the end of the loan. Now, what does that actually mean? You might not understand this, but a deferral is essentially asking the bank to put another lien on your property for every single penny you did not pay during the forbearance period. If you owed $2,000 a month and you've been in forbearance for 10 months and you're coming out of forbearance, you will have a separate lien on your property for $20,000. A lot of people don't realize that that's going to happen to them. The actual effects of this really don't matter because you're not going to notice it unless you refinance, sell, or reach the end of the mortgage. But you have to understand that when somebody runs your credit or looks at the liens on your property, there will be 2 liens instead of 1 on your property. Many people don't like that, but that's your option when you ask for a deferral. If the bank gives you another option, which is to extend the mortgage beyond the normal period by the many months that you were in forbearance, that might be, in my opinion, a better option. In this way, there is no separate lien that's placed on your property. It's basically extending the loan out for 10 or 12 months, however months you've been in forbearance, and just keep paying as if nothing happened. What would happen in that situation, I would imagine, which a lot of people are looking at right now, is the bank would basically issue a new mortgage, extending the mortgage out for 10 more months or 12 months. It is much more convenient for the bank to put a lien on your property in a deferral period than to extend the mortgage for as many months as you were in forbearance. However, in my opinion, it's better for the homeowner to get the extension versus the deferral and the lien. In the extension example, you're not getting a lien. What you're getting is basically a new mortgage that extends out for 10 more months or 12 months the period that you owed. Now, a lot of banks are unable to do this because the rules of the investor do not allow the mortgage to essentially be modified. When you ask the bank to extend beyond 30 years a mortgage, you're essentially asking for a loan modification. Now, banks do loan modifications all the time. However, in this particular circumstance, this is not an actual loan modification because the payment would not change. All you're asking the bank to do is to extend for 10 months or 12 months, however many months that you've been in the forbearance period, your mortgage. I would ask for this before you automatically accept a deferral. If you have the option to extend the mortgage, and then you can avoid having a separate lien, something other that you have to deal with when you sell the property. Now, I've talked about this other third option in other videos, and I want you to focus on this just for 1 minute. If you are coming to the end of the forbearance period and you do not think that you can keep paying your old mortgage, the best thing you should do is ask for a loan modification while you're in forbearance. Loan modifications usually require a homeowner to be late on their mortgage before a bank would consider a loan modification. A loan modification is asking the bank to lower your payment to make it more affordable based on your income. A lot of people have had a decrease in income because of COVID. When you let your loan go in default, you're going to get late payments. The CARES Act says that if you're in forbearance, you don't get late payments on your credit. You can still apply for loan modification and be current if you're in a forbearance. The trick is to do it quickly. Don't wait to the end. Because if you wait to the end, then the bank would end the forbearance and then you will be late for a couple months. It takes about 3 to 6 months for for a bank to approve a loan modification. If you have 3 or 4 months left on your forbearance, the time to apply for loan modification is right now. Ask the bank for a loan modification package, fill it out, submit it, and you might actually get lucky and get a lower payment when the forbearance period ends. This would not affect your credit, and this will help you afford your home and move forward. Now, the bank will do things when they do a real loan modification, like extend the term, lower the interest, and possibly permanently forbear a part of what's owed to the back end of the mortgage. All these things are very good for you if you're unable to make your mortgage payment, but you have to plan it properly. Don't wait till the last minute to ask for a loan modification. Do it as soon as possible. Remember, the CARES Act says that credit is not affected when you request a forbearance. You're technically not late, even though you're not paying, but you're not being reported to the credit bureaus. This is a fantastic, once-in-a-lifetime deal for you. You're not paying your mortgage and you're not getting any consequences from it. Apply for a loan modification. Remember, loan modifications are generally only available for people who are late on their mortgage, which obviously affects your credit. Right now, your credit's not being affected because you're in a forbearance. Use that time to apply for loan modification. Call the bank, ask them for their package, and submit it. You might get a better deal. Remember, a loan modification does not require good credit. So if you're not paying your other things like your cars, your credit cards, and other things that you have in your life, you can still apply for loan modification. It's a very good time to do this. Don't wait for the last minute. Make your application, submit it, and see if the bank offers you something good so you can move forward and keep your home. My name is Diego Mendez. I've done thousands of loan modifications for people. I'm an attorney here in Miami. I've helped people in bankruptcy and other debt issues. If you have any questions, I will make my best attempt to answer every single question in the comments. Subscribe to my channel and like my videos. I will keep making these videos so that you can keep your home, get out of the debt, and get out of this COVID mess in one piece. Thank you very much.